Hello, hello. I'm Erin Aid. This is Boom Bust, and these are the global financial stories impacting your world today. It's Tech Day here on Boom Bust, and we're kicking it off by looking at the GoDaddy.com IPO. The web hosting firm, known for its very risque ads, is seeking a makeover. But will a new hairdo be enough to save this loss-making company? I'll tell you coming right up. Then Gerald Posner is on the show. The best-selling author of God's Bankers is telling us about the history, money, and power at the Vatican Bank. That's the title of his book. And RT's Amira David is joining me in today's Big Deal to talk about the music industry's latest tech offerings and the dubious place that Silk Road seized Bitcoin ended up. Got that. Thought the alliteration would hurt, but nailed it. It's time to get to it, so let's do it. GoDaddy.com, the web hosting and domain registration site, known as much for its racy commercials as its actual business, went public on the New York Stock Exchange Wednesday. Trading under the ticker symbol GDDY, the stock opened at $26.15, which was 31% above its IPO price, and shares jumped as much as 34% in early trading. Now, after pricing its initial public offering at $20 a share, which many believed was a total overvaluation, the company raised $440 million Tuesday, aiming for a total market value of more than $4 billion. However, it's probably not worth that price because the company very simply isn't profitable. GoDaddy does, however, have steady revenue from its product subscriptions, and according to SEC filings, the company generated $1.4 billion from bookings in 2013. However, this hasn't led to profits. In fact, the company reported a net loss of over $143 million in 2014, not to mention the $1.5 billion worth of debt that it's holding. Now, according to the company's prospectus, GoDaddy oversees 59 million domains, or about 21% of the worldwide URLs. So, not surprisingly, internet site registration remains GoDaddy's biggest source of revenue. However, executives have described the IPO more as an opportunity to rebrand the company than as an occasion to raise money. GoDaddy was purchased back in 2011 by private equity firms KKR, Silver Lake, and Technology Crossover Ventures for about $2.2 billion. Since then, the firms have sought to promote GoDaddy as a guide to the internet for small businesses. In IPO documents, the company said, quote, "There can be no assurance that we will succeed in repositioning our brand or that by doing so we will grow our total customers, increase our revenue, or maintain our current high level of brand recognition." Wow. Way to exude confidence. I mean, why would I buy stock in your company? Between its inability to generate profit for nearly 2 decades and its mispriced IPO, I'm kind of left thinking perhaps there's some other tech companies out there that would be a stronger investment. But even then, tech valuations there are still pretty rich right now. And while many will argue that the exuberance for the tech sector hasn't hit the same fever pitch that it did back in 1999, there is no doubt froth in the market. However, both investors and tech companies, they now have an opportunity to be more selective. You have interesting, profit-generating, value-add companies like Etsy, Uber, Airbnb, and Pinterest, many others. I'm just naming ones that I personally like. And those companies aren't rushing to IPO like GoDaddy because they know that they have a good thing. Who needs to go public when you can get hundreds of millions of dollars in funding from private companies and not have to share financials with the public? Strong players, that's who. But if you're pumped to get in on the debut offering of this generation's Pets.com, then by all means, go ahead and buy GoDaddy. Vatican City is a sovereign state within Italy that controls its own finances via the Vatican Bank. It was developed during World War II and is a cross between the Federal Reserve and an offshore bank. To get a better understanding of this, Gerald Posner is on the show. Gerald is the author of God's Bankers, A History of Money and Power at the Vatican, and his latest book takes an in-depth look at the money behind the Pope's personal financial institution. I asked him to start off by telling me exactly what the Vatican Bank is. Take a look at what he had to say.
It is a cross between the two, but if it has its true nature, its real heart and soul, is an offshore bank and just happens to be operating in the middle of a foreign capital. It's a bank created in the middle of World War II by the Vatican as a sovereign nation, and that's the thing I think that's so key. It's not just one of the world's biggest religions, but also happens to be a sovereign country. So when they created the bank in the middle of the war, they've run it for the past 70 years in the dark, total secrecy, except for the last few years when reform started. No one's able to see who has accounts there and what money's going through it.
Now, you just mentioned it was created during World War II, but can you give myself and the viewers a brief history, quick history of the Vatican Bank?
Yeah, I mean, this is the most amazing part to me when I started doing this work was here's a 2,000-year-old institution that really relied on raising donations, and for a long time there were Pope kings. You know, the popes also had their own secular empire, and then they lost that in the late 1800s. They didn't get their sovereignty back until they got it from Benito Mussolini, the fascist dictator of Italy, when the Vatican, the Church, and the fascists struck an accord in 1929. And then all of a sudden, this 2,000-year-old institution in the middle of World War II in 1942 decides with the Pope and the guy who's running their finances to form this, as you called it, quasi-central bank called the Vatican Bank. And it is really formed to stay off the radar for British and American intelligence, who were trying their hardest to stop countries like the Vatican, sovereign little neutral countries, from dealing with the Nazis. The Vatican was able to keep doing business with the Germans through the entire war as a result of having that bank. And in subsequent decades, it became the primary bank for political slush funds, for Italy's conservative politicians, for the mafia using all types of funds, for illegal proceeds, and for money launderers, and for people dodging taxes. So it's just been an outlier bank that happens to be run by the Roman Catholic Church that's just sitting inside Vatican City. It only has one branch. That's the branch in Vatican City. It's nowhere else. It only has one person it answers to, the Pope. He's the single shareholder. It has no responsibility in its charter to turn a profit, and it doesn't make loans like a traditional bank. So it's an unusual amalgam.
Now, let's talk about transparency for a second. You say that the Vatican Bank is one of the top banks in the world for money laundering. So my question is, why? And basically, I mean, are there any moral restrictions for the bank in terms of whom or what they'll launder money for?
Yes, as a matter of fact, one of the things, and I quote an Italian businessman who was a very close associate of the Vatican Bank, who ends up, unfortunately for him, dead of cyanide poisoning in an Italian jail cell 2 days after he's convicted. But before he dies of cyanide poisoning, which the Italians deem officially as suicide, even though they had him in a special wing of the prison under 24-hour guard, and his food was prepared in a special part of the kitchen, then sealed in containers and brought to him with somebody watching as he opened it. Somehow somebody still managed to poison him, or he killed himself. But before he died, he said that when he was working with the Vatican Bank, they drew this distinction, that if the money was just from somebody who was uber wealthy and wanted to avoid paying Italian taxes, and they put their honestly earned money inside the Vatican Bank, that was all right. But if it came from extortion or drug deals or somebody running an entire operation that was illegal, then the Vatican Bank looked askance at that. But both have ended up being put there. The difference is that this bank is being changed against its own will in some ways because they have no choice. And what I mean by that is, in 1999, Italy decided to adopt the euro, the common currency. Once it did that, Aaron, the Vatican had to decide what to do because it relied on the lira for its own currency, which made the money laundering between Italy and the Vatican much easier. It decided not to issue its own currency, but to go with the euro. What they didn't realize inside the church at that time was that decision meant that they were going to be subject to financial evaluators being sent from Brussels to look at the Vatican Bank to make sure it was a compliant bank. And guess what? It had no law against money laundering. They didn't pass one until 2011. It had no laws against the financing of terrorism. They didn't pass it until 2011. They had no restrictions on the amount of cash you could bring into the Vatican. 10,000 euros or $10,000 didn't exist. They passed those in 2012. So money val evaluators have been there. Brussels is pushing them to become a compliant bank. Francis is putting in the reforms. But in many ways, they have no choice. The bad old days are probably just history now.
Now, in 2013, Pope Francis began reforming and modernizing the Vatican Bank. You mentioned it before. So how are those reforms going?
Francis's reforms are going along well. And, you know, in the beginning, when he took office in 2013, he said, I'm going to reform the finances of the Vatican. And I was a skeptic because I know by studying the last 200-year history of the finances of the Vatican that popes come in all the time saying, I'm going to reform the finances. There are real problems here. And sometimes in the past, Aaron, they have reformed. Like in the 1960s, there was a Pope Paul VI, who made a major change in the bureaucracy of the finances of the church, thinking it was going to be better. It actually worsened the situation, created more bureaucracy and more areas for secrecy. So sometimes the reforms are well-intentioned, just don't turn out very well. I think Francis's heart is in the right place. I think he is putting into place the reforms to move it along very aggressively. The question that I have for him is that if he is going to reform the Vatican finances and the Vatican Bank moving forward, fantastic. But will he also have the courage as the Pope to be able to apply some transparency to the Vatican Bank's history? Will he release the Holocaust-era files or the Vatican Bank's World War II files? Remember, in the Vatican, we are talking about a non-hereditary absolute monarchy. That's what it really is. There's no judicial system. There's no checks and balances in terms of the legislature. The word of the Pope is final. It's a true monarchy. It just happens that they're elected when one dies or one resigns, as in the case of Benedict. So he can do whatever he wants. He can order the release of those files with a single decree, and nobody can overturn him. If Francis really wants the reformer cape that he seems to want, then I'm hoping he'll clear up some of the past questions, some of them that I've raised, and he'll also reform going forward as well.
Time now for a very quick break, but stick around because when we return, RT's Lindsay France will be joining us live from Los Angeles to talk about gold. Who doesn't want to hear about that? Then Real Vision founder Raoul Powell is back on the show and sharing with us his market insight. And in today's Big Deal, Amira David is telling us about the governmental hands that Silk Road seized Bitcoin ended up in, and also how rapper Jay-Z is changing the way that we listen to music. Two seemingly different topics, but she will manage to blend them. And remember, you can see all segments featured in today's show on YouTube at youtube.com/boombustrt and also on Hulu, hulu.com/boom-bust. Now, as we head to break, here are a look at your closing numbers of the bell. Come on back.
I think the shutdown's pathetic, Larry. We shouldn't have to pay taxes then, should we?
Good idea, Jesse.
But have no fear, because the billionaire oligarchs are here.
What if there were a country in which the government operated outside of constitutional rule?
40% of the food that we produce in the country never makes it into our mouths.
How much fallout do you think this is going to create for the CIA?
Do you think this is what's triggering the crisis?
America's the largest economy in the world. It's also the largest debtor nation in the history of the world.
I need to know what to be terrified of. There is nothing scarier than not knowing what to freak out about.
One minute they were working toward the American dream, the next they were just trying to survive the night. It's time for Americans and lawmakers in Washington to wake up and start talking about the real causes of poverty in America.
On in your city, in your streets, never back down like Tyrell, and the truth is what you seek. To analyze, investigate from the bottom to the top. You speak your mind like Sean Stone, whether they like it or not. I got Tabitha, Miss Wallace, with the wisdom and the pearl. Between the outrage and the evidence, what's going on in this world? Watching the hawks, watching the hawks, watching the hawks. Listen when they talk.
Welcome back to the show. Now, new research from Goldman Sachs says that the world may run out of mineable reserves such as gold and diamonds in the next 20 years. Joining us now from Los Angeles to discuss is RT correspondent Lindsay France. So, Lindsay, can you tell me more about this prediction? Kind of scary, interesting stuff. What's going on here?
Yeah, so this Goldman Sachs report is meant to point out the sources of scarcity and why the value is being driven up, and essentially to point you where to invest. So the mining of gold sources have been falling very rapidly, and it's not only that, but the market's belief in this new scarcity is obviously driving up the price. Also, if you look at other reports, there's a report out by Zero Hedge's gold mining industry forecast that points to a peak production of gold hitting in 2015. It's not a new concept, but putting a date on it like this, it's obviously affecting the market. And, that's just such a short time span is making gold, hitting the headlines big time right now.
Absolutely. And I mean, those numbers, it's very soon. Like you said, that short timeline definitely spooks the market. But what is the forecast for other mineable reserves? Things like, copper, nickel, platinum. What's the story there?
Well, for those, we're looking at a longer time span. So the reserves there are going to be about 40 years, according to the forecasts. So there's not, such a reaction right now. Diamonds is also interesting. There's just a couple of decades left on that, again, according to the industry resources there. But gold is really the one people are watching. It's been highly valued for quite some time. And obviously, with this news, again, the price and the value is driven up.
Lindsay, I want to ask you, too, is this a superficial issue, or is there actual cause for concern here? Because obviously it's moving the market, so it matters somewhat. But is it kind of just one of these small issues and then it will die down? What do you think?
Well, right now, the mineable sort of resources, the metals in the Earth's crust are showing that very low levels. Also, the mineable high-quality metals are showing that they're very, very scarce. And actually, if you look at an example recently out of Australia, recently the Gold Road Resources Executive Chairman Ian Murray pointed to 13 new sources of gold in Australia alone since 2009. So there are people out there saying, it's not all gone. Let's not look at a doomsday scenario when it comes to gold. But the overriding information from a lot of other sources is pointing to the fact that there's a very short time span on peak production. You're going to want to get in there, so it's looking pretty fact-based. But of course, it could change in the next couple of days with new information. But looking at the science of it anyway, it does point to a possible peak production.
Lindsay, thank you as always. Interesting stuff. We love having you on every week, so come back with more. That was RT's Lindsay France coming to us live from Los Angeles. To get his market insight, Raul Powell is back on the show. Now, Raul is the founder of Global Macro Investor and Real Vision TV. I first asked Raul how the central banks will set policy rates in Norway, given their pristine fiscal record and large oil reserves. Take a look at what he had to say.
Well, I'm getting interested in actually what Norway's oil sovereign wealth fund does. Because Norway themselves obviously are a large commodity producer on a number of levels, not only oil. Now, those prices have fallen. The reason they have the sovereign wealth fund is to cushion themselves on the downside of the commodity cycles. So my guess is the world's largest buyer of equities may end up being one of the world's largest sellers of equities, as they're forced to release some of the money from the sovereign wealth fund over time. That's not an immediate thing, but if prices stay longer lower for longer, then the chances are that whole dynamic will change.
Now, we've talked a bit on Boom Bust about the dearth of above-ground storage capacity. And some people are talking about the storage capacity problem, meaning $20 oil in the not-so-distant future. Now, that sounds super pessimistic to me, no?
No. Yes, I mean, look, it's not the most likely outcome, but is it probable and possible? Yes, it is. And probably the possibility is higher than people think. And that's because, as we know, nobody shut production. So they kind of closed down some of the rigs that were really not being used, etc. But what's happening is production is still at all-time highs. And so all this oil is going into storage. And then I think there's a much bigger bust to come out of the oil patch than people are expecting, because people are going to have to shut down a lot of production, and much of this is unprofitable. And the oil arbitrage won't last very long because all of the oil storage is going to be full within the next 3 months, let's say.
Now, I want to ask you, how much do you think increased turmoil in the Middle East around Yemen and Saudi Arabia can add to oil prices?
Very little, because I don't think much of the Middle East issues have created any issues for oil in the past. And if it is, it's a short-term phenomena. Clearly, a much bigger situation developing would change that, but I don't see that for the time being, and I don't see a real major threat to oil distribution or oil production.
Now, Raul, in Europe, it's all about Greece, Grexit, and growth. This little alliteration here for you. But Greece is falling apart while the rest of the Eurozone, it seems to be underpinned by better numbers and quantitative easing from the central bank. So isn't this a recipe for a Grexident? And by that, I mean an accidental Greek Eurozone exit?
Look, again, much like the negative interest rate question, these are really unknown things. We just don't know how this will work. Now, clearly, there is a risk that Greece will exit. Now, most of us have been following Europe for a long time now, know that somewhere within this, whether it ends up being Greece or whether it ends up being Spain or Italy or France, are going to create a huge problem for the Eurozone. So it's a matter of time. And is it this one? I just don't know. Possibly is, possibly not. Is it the Podemos political party rising in Spain? Could that be it? Possibly could be. All we know is it's unsustainable. Now, obviously, when you've got this kind of growth differential, it creates fractures. Although Greece is actually one of the fastest growing economies right now, but it's coming from a very low base. And, let's see in the next down cycle, that's when the real risk is, the economic down cycles. That's when people really can't pay their bills. And, we'll have to wait for the next one to come along and see how that works out.
Raul, is there anything else on your radar right now that you're looking at that other people might not be?
Yeah, I think one of the things I'm starting to write about now for my Global Macro Investor publication is I'm looking not at the oil market, but the entire commodity complex, because people understand a bit about the oil market issue and the excess capacity that's there, but they don't really understand that that is a phenomenon that's across almost all commodities right now. And we've spent so much money building out, whether it's liquid natural gas or copper or whatever it may be, iron ore, and many of the prices are collapsing or will fall over time. And what that means for the global economy. And I think the knock-on effect of the downside of the commodity cycle is much bigger than people expect. The commodity cycle, the boom-bust, which your show's named after, is the oldest business cycle of all. And we have to take that seriously. And that can create a lot of problems. We talked about Australia, Canada, etc. Those countries could run into real problems if this happens, and many emerging market nations too. So that's what I'm doing work on now.
It is big deal time, and I'm joined again by the beautiful Amira David. Thank you for being here. And
always so kind, Amira.
It's great having you here. And today we're going to talk about music and then a little bit of Bitcoin seizure and governmental stuff. But let's start with the music. And, there's this new streaming service. It's called Tidal, and it's being developed by Jay-Z and is promising to make artists an extra buck, which they've been trying to do for years, losing money with no records to sell. And no one downloads music anyway and pays for it. But that's very good for them. The big question is it good for consumers? So first of all, tell us about this service. It kind of sounds like Spotify to me. So what makes it unique and special?
Yeah, it's just like Spotify. I have to be honest, it's not that much more unique than Spotify, other than the fact that it's double the price. That's what distinguishes it. But there's a reason for that, and you alluded to it. It's the fact that these artists are losing a lot of money, the fact that there are no record sales. And streaming is the latest, hottest thing. That's where all the consumers are. So they're trying to take advantage of it. They are trying to take ownership of it. And so what they're doing, Jay-Z owns this, but he's gotten all of these performers together, and we're talking about the hottest performers in the game, at least when it comes to pop music: Madonna, Kanye West, Nicki Minaj. And he is offering them 3% stake in the company. So at the outset, they're going to have a stake in the company. In addition to that, the money that streams in from consumers, they'll be taking a portion of that as well. And they say this is all about respecting the artistry, right? Putting more value on the music, and music has lost so much value over the years. This is what they're saying. Jay-Z, I want to read you what he told Billboard. He said, "People really feel music is free, but we'll pay $6 for water. You can drink water for free out of the tap, and it's good water, but they're okay paying for it." It's just the mindset right now. So what Jay-Z and his counterparts are trying to do is really change that mindset, that say, you know what, it shouldn't be free. You should have to pay for it. And we're going to designate a value on music. It's just tough, because once you give somebody something free, it's really hard
it's hard to fight with the price point of zero. And I have to say, I don't know if I'd spend $6 for water, but I get his point. It was
he's spending $6 for water.
I can't afford $6 water. Other than Jay-Z and Beyonce, I don't know who does. But it's an interesting concept, and obviously you have these artists who are equity holders in this company. But it's how much of the company can you give away? How many artists can you come in and offer this particular structure to? And while it is clearly better for them, how does the consumer benefit from this? Like, why is this better than Spotify?
And that's what people think about, right? As soon as they hear about a streaming service, how is this better for me? How is this going to help my bottom line? And that's the problem, is they don't get a lot out of this deal. It's double the price. It does offer a little bit extra exclusive content, and they say the actual music quality is better. But all in all, they're just, from what I've read online, there are not a lot of people who are uber excited about this. And I think it's best summed up by this tweet from this guy, Mark Gomez, who said, appreciate the collaboration, but Tidal for All, more than anything, benefits the artists that own it, not the consumer. So why should we care? I mean, consumers really want a reason to invest in this, right? And I think what doesn't help the whole argument here is the fact that this is being pushed by who? The most, wealthy players in the game. Just to push that point home, Madonna has a net worth of $800 million, Jay-Z $510 million, Beyonce $440 million. Now, those are extreme examples, but it just gives you a sense of how hard I think it will be to kind of sell the argument when people are going to find it difficult to really empathize or sympathize with their struggle. And the whole model is based off of people caring about the artist, and I'm not sure they do.
Yeah, I mean, I like the artist too. I don't care if they're wealthy or not.
You want it for free,
I'm going to spend $1 on iTunes every time.
Exactly.
Let's switch gears though really quick before we run out of time. And I want to talk about, the latest drama with this black market site, Silk Road. It was shut down, nefarious site, but it turns out that the government is in the spotlight this time. So tell me about this.
Yeah, this is not making the government look too good. It seems like the tables are turned. 2 federal agents actually conducting an undercover investigation caught up in illegal activity. One of them, Carl Mark Force, a DEA agent, the other, Sean Bridges, working with the Secret Service. They've been charged with money laundering and wire fraud, essentially siphoning money that's supposed to, they have obtained this Bitcoin digital currency. They're supposed to turn it over to the government. Instead, they're turning it over into their own pockets.
What dummies, man. What made them think they wouldn't get caught doing this? I'm sorry, I don't mean
funneling the money
I'm going to throw
account.
a little editorial. It's just, come on, guys, think twice.
Exactly.
It just seems goofy to me.
It is.
Like, what made them think they could get away with this?
If we have time, I wanted to read you a couple of the things.
Yeah.
Okay, so Force, who's the DEA agent, $800,000 he siphoned away from that website. 3 times the salary he was making as a government agent. He paid off his mortgage with this money. He repaid his $22,000 government loan, wired $235,000 to an offshore account, and invested tens of thousands into real estate and stocks. So
there you have it. So he did okay.
So he made out well for those
buy a
couple
Lamborghini,
years.
but he
for
paid
those
off
couple
his mortgage.
years he made out well.
All right, Amira, thank you so much. It's an interesting story, and I'm sure not the end of that. The end of it, we'll hear more. But thank you. That is all the time we have for now. Please check out our Facebook page. Also tweet at us at AaronAid, at EdwardNH, at Amira David. From all of us here at Boom Bust, thank you so much for watching, and we'll see you next time. Ciao.